What's happening, guys? I hope everybody had a fantastic weekend. We've got the final Sunday scan for January. We're heading right into February this week, and I hope that everybody did have a solid start to the year. If you didn't, that's okay. We've still got a big year ahead of us. So right now, I'm going to continue doing the same thing over and over until it stops working. And I don't want to continue to just be repetitive on Sunday scans, but that's what's working right now. So for me, I don't really care about the big home run style swing trades because I can be consistently great each and every single day without having that overnight risk. And I realize I'm sure I missed a lot of opportunity, but that one time that there's the 500 gap one way or the other way, I'm going to be happy that I didn't do it. Yes, it would have been fantastic, but I can leave the desk at 4 p.m. and actually relax, then have to kind of manage positions until 8 p.m. or wake up at 4 a.m. I'm done with that. So I'm totally happy with firing on all cylinders and continuing to do this as long as I can, as long as the market wants to give like this. So I have a little bit of housekeeping from last week and the week before. Obviously, I didn't pick any winners, and like I said, I was going to. So the prior Sunday video, Sebastian and Jay Young, you guys got the t-shirts for that week. And then last week's video, Chris Mingachi, I think so, maybe, and Brett, you guys won the t-shirts for last week. Then I wore my Icon Meals shirt for this week. Somebody did not claim it last, I think a week or two ago. So M Power, you've got the Icon Meals box for this week. So all you guys need to do is email me, webmaster@investorsunderground.com. I'll get your information and ship you guys out what you won. So as always, I appreciate you guys watching and leaving your key takeaway. All you have to do is like the video, leave your key takeaway with a timestamp. Allows us to go back and create those short little videos that you see us putting out as little micro content each and every single day. Now, video topics. One of the first things I wanted to kind of discuss was the data issues, right? So last week there was 2 days that first was data was delayed by sometimes a minute 20 seconds. And then the second time was the New York Stock Exchange actually had an outage. And so those are big issues. But here's the thing, is I have multiple backups, right? I've got multiple brokerages, multiple backup things that I can be looking at. But I am not comfortable, 100% confident and comfortable on any other trading setup beyond the one that I use every single day. So when you know that there's an issue, if you continue to take on risk, if you do not put stops in, if you continue to trade aggressively, that's on you. And I know it's always easy to, the program sucks and the program's fault and program this, program that. You knew at the start of the day that there was an issue. So for me, typically I would probably continue to trade and try to, figure it out. But for me, I said, hands off. I'm going to relax a little bit and I'm just going to wait for things to kind of get back to the way that they should be so that I don't get off from firing on all cylinders. And so that was probably the best choice because I probably would have been wrong on that Monday, but instead I was kind of forced to sit on my hands a little bit and wait for things to calm down. Now, next was Twitter this week. You guys saw a lot of the calls. Those are actually all of the calls for SPY-related, market-related kind of reversal points. So I do hope if you're not in the room, you guys were able to benefit from that, kind of see what I'm looking for, see how I run the room. That included the timestamps, so you can see that that was all ahead of time and very, very near exhaustion points on both sides. Got the Tesla long off the lows, and then again off the lows towards the end of the day. Found the top on the SPY a couple times with Apple, and I showed you guys how I was using the main trades for the week, or the main earnings reports for each day to anticipate that. So for example, Microsoft, Tesla, so on and so forth. So hopefully that was helpful to you guys. If not, go back, go check it out. Go line up the timestamps and sort of the thought process 2 minutes, 5 minutes, 10 minutes before this kind of stuff happened, including the thought process that we're going to button up real nice into the close on Friday, but not without that little gut check. And, we had a nice pullback before the close, but like I said, I did not expect us to, unwind like crazy. Just one of those things to make everybody second guess if they had kind of sized up, bought too much, on margin, whatever. Maybe they de-size a little bit and then bam, button it up into the weekend. Next point was repeat until it stops working. So, like I said, I'm not going to bore you guys saying the same thing over and over, but for right now, scans, I want to stay familiar with what trades I could trade after open, like the hoods, like the DraftKings, like X, like RBLX and RIBN. I want to stay familiar with where those are within their moves so that if and when the trade comes, if and when they show up on scan, I can react like that. Same thing with Lucid and F and all of these different trades. So although I'm not coming to Monday prepared, I'm going to trade this at this price, I know what they look like. I'm familiar with the charts. And if and when they show up, I don't have to do all that prior thinking before I can make a decision. I can just react. And that's sort of the point. And, I don't care if we gap down on Monday. I don't care if we gap up. I prefer to gap up. I prefer to push off the open and have some type of big squeeze out. But we're in a market where you just got to relax and just let's see what happens. And hopefully it stays that way for quite some time because as you guys know, that kind of stuff compounds. And looking back at January so far, I had a couple days where I was probably a little bit too aggressive. But otherwise, it is just day after day after day after day of consistently big opportunities. And, that might not go away for 2 or 3 months before things start to really settle in. But don't overcomplicate what you're doing. Stop trying to figure it out. Stop trying to have a super bias one way or the other, but just take the meat of the move. And, I think the last point that I wanted to make today was kind of understanding the why and why we have the market downside the way that we do and also the upside. Now, obviously, everybody's been talking about a pullback for forever, and we finally got a decently big pullback. You look at the SPY, maybe it's not, off. I guess it's pulled back a decent chunk, but it's not off by as much as some of these other ones, like the DraftKings and a lot of the tech and all these other names that have lost literally 50, 60, 70% of their value. We're not there yet on the indices. And I don't think we're going to go there. But what I want you guys to kind of think about and understand is they're working out margins, margin calls, people that are too margin, one way or the other. And that's why we have these secondary unwinds because we start to pull back, people buy, they add. Oh man, I don't have a good average. I can buy on margin. I'll add some more. Bam, they get margin sold out, and then we have that secondary push down that maybe it would not have actually gone down that low without people getting on the wrong side of the trade. So now shorts look at that and say, oh my gosh, we're going to zero. This is the end, and it's going to be just like 2 years ago before. The COVID action started to come into the market. And then they get on the short side. And then they start to get too aggressive. And then they button it up into the weekend where there's too many people that are too leveraged, too aggressive, too biased to the short side. And then we actually overextend to the upside, right? So that's why we always talk about not underestimating the bear market rally and actually thinking about how can you benefit from the exhaustion points both to the upside and the downside? And if you switch that mentality and think about that, we're not just going to go straight back up to the highs. It's just not happening, in my opinion. There's always, it's always possible, I guess. But, in my eyes, I just don't see it happening. And I think that it's going to take time and more time and more time. And I would consider going back and looking at VIAC, if you guys remember, that was another one that had gone straight up for like a year, and then it completely unwound, and everybody was just like, you know what, this thing's gonna bounce. This is a no-brainer. It was just way up here. It's got to bounce. It's a good entry point. Yada 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 yada. And here we are a year later, and we're still, at the same price level. So the only thing that's going to fix this, in my opinion, is time. And in between that time, whether or not we have this whole new, buyer's market that gets exhausted to the downside and we go down to SPY 380 or 400, that's always possible, right? So we have to just kind of trade within what we're given until the range starts to slow down. And I do expect the range to tighten up a little bit after these earnings. Obviously, we had Apple and Microsoft and Tesla and, all these other recent big names reporting. But after that, I would expect it to tighten up some, and we'll see what happens. But be cautious, just thinking that that's it. And, it's going to just go back to normal and we're going to go back up to the highs. It's possible, but there's a lot more to be made with the range right now than trying to pick your spots and, just play the bounce and think that everything's going to be great. All right, so first and foremost, as you guys know, for the second part of Scan, I'm not a financial advisor. These are not buy or sell recommendations, and it's for informational and educational purposes only. If you have any questions whatsoever, as always, leave a comment. Feel free to ask. But if you're looking to be told what to buy or sell, you're in the wrong spot. That's not what we do. We are a community of traders that are just trying to share thoughts and potential opportunities for other people to see. And if you see a trade there, fantastic. If you don't, you shouldn't be trading it anyway. So let's get right into it. First, Apple. As you guys know, Apple and Tesla and all these other names, they're typically not, on my watch list. And it's only times that we have extreme volatility that I see, a really good edge. And Apple on Friday was an amazing trader, both on the long side and the short side. I traded the short side a couple times, but I also, with Tesla, I traded the long into the short and back into the long again. So I'm open to both sides. I've been probably the most long I've ever been on these bounces. Normally, I just kind of look for the short on situations like this, but I've been very open to trading, both sides of what's going on lately. So for me, as sort of the market kind of play, I've been trading TQQQ a lot, but the downside to that is it just eats away your buying power. No matter, how much you have in your account, it's dollar for dollar, and it just eats away margin like crazy. So for me, I'd rather spread it out and really make my money work for me, and be able to trade, things that are leveraged, such as Apple and Tesla and all these other ones, rather than just have one name that just kind of takes all your buying power. So Apple's definitely a watch. TQQQ obviously is the index for all the tech. If you guys are familiar with that, if you're not, review it, go through, and see if it's something that you like. You could always play the opposite of that, which is obviously SQQQ. So if you prefer to short something and you want to go long on TQQQ, you can just short SQQQ instead, or vice versa. But as far as prep out of the gate on Monday, what am I looking for? In an ideal situation, the fact that they buttoned it up on Friday, I would love to see a nice power gap on Monday, potentially gap, pull back a little bit, press, and then look for some type of pullback. But like I said, don't underestimate how far these things can also rally back, because we are way off highs, and shorts are probably very aggressive because it did not look good quite a bit last week. And then all of a sudden, here we are, we look like we might finally bounce. So you want to be super, super cautious, getting a bias in any one direction. But like I said, for now, I'm focused on opportunities that are related to the market. So it doesn't just have to be Apple. It could be Tesla, it could be AMD. It could be even something like F or LCID. Whatever it is that I see an edge forming on, I want to be present on. So those are going to be sort of the main watches for me alongside with TKLF. Now, TKLF is pretty interesting. It reminds me a lot of SOPA, right? So SOPA came down. They pretty much they're doing the same kind of blueprint where it opened at a ridiculous level, came into near zero, had a bunch of volume, and then they kind of trapped it throughout the next couple days and then had that secondary move. So is that possible? You know, in TKLF, got the ticker wrong. You know, it's always possible. It only had, I think it was 30 million or so. Yeah, 28 million shares that traded. But the way in which that it traded on Friday, and I traded it pretty well, you know, into the ramps, covered into the dips. And it was important to me to be covering into the flushes. Just the way that it was trading, it was extremely thick. But when they wanted to make it thin, they did. And then as soon as it started to go, they would hammer it in again with lots of offers. And then after I saw it after hours on Friday, it made me start to think about maybe that was all part of the plan. Maybe they wanted it to appear super, super thick. Maybe they wanted it to appear like it was, you know, going to end up going a lot lower. And if that's the case, I want to watch it over the next couple days if it should have cracked, if it should have faded. And if we start to see those wicks that we talk about, then we might start to have a T+2 kind of situation on some sort of buy-ins. So I'm not ultra bullish on this thing, but watch to see over the next couple days if a buyer remains in the tape. If it does, then there's potential. If not, forget it. Hood and SQQQ, I kind of already went over SQQQ, but Hood, we now know why it was strong on Friday, and Kathy Wood bought 2.5 million shares. Now, it's possible we continue to gap up, but I'm going to be looking for a fade here at some point. I think it's going to probably end up like DraftKings when they tried to do the rebound over here. You can see on the daily like this, or even Peloton had a similar situation where it kind of rebounded and then starts to come back down. So I'm going to be looking for that sort of setup, but that doesn't mean that I think it's just a short. It's got to pull back. It has to, you know, fade off. It can't go up. You know, all of that could happen. So it doesn't mean that I'm just going to be biased to the short side. I'm just going to be looking for it to go higher and fail to follow through. And if it does, great. I think we might have a good opportunity. If it stays strong, forget it. We went over the levels on Friday. Each level that I gave, every time it came back, it pretty much held. And you can kind of see, just, you know, make your life easy. And the 1210 level was the level that I gave. But you can see how it pretty much based this consolidation area, came back, tested it again. The one time it pulled under it, the first test, it went right back over. And then again, right over here, you can see it based again. So remember, when you're looking at key levels, it doesn't matter if it goes under it. It's all about how it reacts when it tests it again. Continuation side, I actually got quite a few on here. SBEV, we talked about this quite a bit. You can see the wicks that we talk about all the time. You can see the liquidity trap right here. We pointed this one out on the prior Sunday video, two videos ago. And then a couple days later, we had this move. Same deal again. And you can see that we had 64 million and then another 62 million shares traded these 2 days. So that, to me, creates another liquidity trap. And you can see it's just right around 1.7 to 2 million shares a day. So if we do break over this prior top 420s, 430s level, we have a potential trigger opportunity where, you know, we have that secondary move. So we're very close to either squeezing out or just having a massive reject. So, you know, as bullish as you want to be, and as much as you think that this could break out, and I do think it could, if it rejects on those levels hard, it's going to come right back in. So just keep that in mind, but let's see, you know, what happens. Archon, very nice. This was an idea, 110. I actually sold some at 138 after hours. There was a big bidder that was kind of walking it up, which was nice to see. and pretty much hit the 138 bid. But maybe we have some type of 4 a.m., 7 a.m. kind of activity on this thing. But so far, so good. It was the first time that we've seen some volume and action in the tape. Pretty much held throughout the day. You can tell that there was a buyer in the tape. Each time it came down, it kind of swiped back up. So that was good to see. And again, if the trend fails and it doesn't really hold trend throughout the mid-morning, then I'm not looking to overstay. I already sold some 110s to 138, and I'm looking to ride out the rest until it stops working. Dave is we talked about this one. Figured we might have that 10 reject, and we did over here. But guess what? It started to hold trend, and you can see, we go from 3 million, 3.8 million down to about 250,000 shares. So we have a potential liquidity situation once again. And as you can see, it kind of played out. We had 4 million shares on Friday, squeezing out a bunch of shorts. So I did not participate in any of this. Just looks like a little slow cover. But as it came in, I took on a small position just to be present because I had already missed it once. So I just wanted to get in there. If it starts to gap up and look like it's going to rip on Monday, then I can add in. And if it gaps down, it doesn't do anything, then it's not really a big deal. If it sets up for a red to green trade, I can always scale into that trade. So nothing I'm too crazy biased about, but definitely potential there. A couple others, APM came back. I don't have a position anymore, but as you guys saw, the nice liquidity trap setup right here. We had 110 million down to 5 million. Prior day was about 4 million. And then that next day we capped up. It hit 4. I think it was 436 or 439. I didn't sell in the 4s, and it came all the way back into the 3s. But it was a nice way to start. I think that was the Monday, Monday, Tuesday, Wednesday. No, it was Tuesday. But it was a nice way to start the day for sure. And no, it was Monday because we had the day. No, 25th. Let me look. 25th. Yeah, it was Tuesday morning. But either way, it was a great way, nice gap up, and yeah, I wish I was up at 4 a.m. and sold it at 4:30. It was a monster of a difference, but that's okay. But same situation again. You can see the volume tapering off. Again, the trend has to slowly but surely kind of firm up. If it starts to just gap and fade off, then obviously not. It's just like IMTE, where there was no real exhaustion move. And, without that exhaustion move, it's going to continue to head higher and higher and higher until there's an exchange of some sort. So that's sort of the same process on APM. Can't type today. Nothing I'm crazy excited about, just notable. It's hanging around, and same deal with this IMRN. You can see that it's trending well. It had the liquidity day right over here. We had about 46 million, and since that point we've barely traded anything, and we're coming back up. So you can see that basically 405s is probably the first point, and then 425, 430s range as sort of a trigger for the next leg. But you can see that there was a big transition of volume, and there's been a buyer in the tape since, despite lack of liquidity. So when that happens, sometimes we can have a pretty nice breakout. And then last but not least, BBBY. No position here either, but you can see that we've got to, just draw a line, make your life easy. And you can see that each time it comes to the 16, pretty much 1550s and right around that 1620 mark or so, it's caught. It's caught in that channel. So each time it closes under or around 1550s, and every time it tests 1620s, it rejects. So if it starts to base at 1550s and it starts to break out and form a new base at 1620s, you might have a decent reversal. So nothing I'm excited about. As you guys know, probably should watch AMC and GME with this thing. But at some point, if you remember, they did the buyback, things like that. At some point, it might be worth watching if it starts to build a base over those 1620s. So that's about it for me. Hopefully you guys had a fantastic week last week. Hopefully it's continuing to be consistently bigger than prior days. When we have market range like this, it's a great time to compound gains and compound your account. you don't need to try to kill it each and every single day. If you just trade the proper process, same thing over and over, that crushing it, those outlier moves is going to be a byproduct of solid focus, solid process, solid understanding of what makes a good trade. So sometimes it's in these types of market, it's very easy to feel like you shoulda, coulda, woulda done a lot more. And there's been a lot of that feeling for me, but you know what? I don't care, because each and every single day is a new day, and there is just plenty of opportunity. Win or lose, there's plenty of opportunity. And a lot of times in the past, I've said the market that takes also gives, right? And you have to remember that because sometimes when you lose, you kind of like want to crawl in a hole and I'll go back to what I was doing before. But if over time you have proof that you are a good trader, if over time you have proof that your process works, you have to trust that process and just go back to business the very next day. Because you're only hurting yourself by, kind of crawling in a hole and just being like, oh, I'm just going to go back to basics and trade real small. No, this is the market to perform if you have proof that you're a performer, right? And proof that you're a performer means that you have consistency. You've found some type of process that over time, yeah, you're going to have those days in between, right? But over time, your chart is going up. Over time, you've had success. And if you're going to let one day throw you off, that's a problem. So just keep that in mind. You just have to have that next mentality and just go right back to back the very next day. All right, guys, we'll see you in the room.